Okay. So next up, we're going to talk about one of those indicators, which is the relative strength index. And you can see that right down here. I've added this to my chart. If you don't know what I'm talking about, indicators, RSI, right there at the top, relative strength index. Okay. Now, the RSI compares bullish and bearish price momentum and displays the results in an oscillator that can be placed alongside our price chart. Right? So the indicator can fluctuate anywhere between 100%, which we didn't even see, all the way up here, and 0% all the way down here. And it's considered, quote, overbought. Okay, overbought. And the indicator is above 70%. Right, so this is all overbought, anything up here. And then oversold, boop, right there, that one little blip when the indicator is below 30%, okay? And like most technical indicators, its signals are most reliable when they conform to the long-term trend, okay? And do note, true reversal signals are rare and can be difficult to separate from false signals. An example of this, some traders like to simply say, okay, I'll buy here whenever it's oversold, and then I'll sell when it's overbought. Okay, well, in this instance, not too shabby, a pretty solid trade, right? But then this was a bear market into a trading range into the start of a bull market. So not a bad trade, but I mean, technically he sold the bottom. And keep in mind, I'm using logarithmic graphs. I mean, I know technically about it. I mean, he sold the bottom. Right? He sold when it was overbought, sure, but was it truly? Same for the people selling here when it's overbought. I'll turn back log just so we can see it all. Or here, or here, or here, you know, here. Like you're selling when it's, quote, overbought, meaning that the momentum is incredibly high and the turning point of the momentum switching from the buyers to the bears is closer and closer. It doesn't mean it's here. All right. And so simply buying when it's oversold and selling when it's overbought, it's not a bad idea to be aware. You know, when you're oversold, that's when like you want to start watching price action, your other indicators, all kinds of stuff like that, mainly price action, and watch for a good entry. And then when you're getting oversold, maybe you want to be looking for good spaces to take profits on the short term. Like right here, that was a good profit take. Don't get me wrong. That was a great profit taking zone, but only if you hop back in at the right time. And I'll zoom in here as we get into some of the techniques of using the RSI so we can see what I'm talking about. Okay. So one of the coolest things about RSI and momentum indicators is that they give us a chance to find divergences in the market. So what do I mean by divergence? Divergence would be when your oscillator or your momentum indicator makes a lower low, or sorry, let me do that one more time. Let me just find an example because it's going to be easier if I have a good example too. I think we had one recently, didn't we? Yeah, perfect. So here we are, 2018 Bitcoin. So divergence is when you have your momentum shifting back in the favor of the trend in which you are not in. Okay. So you have momentum rising, right? That's bullish, while your price was falling. Right? Do you guys see that? Right? Your momentum was returning to the buyers while the sellers were selling even lower. This is a buying opportunity. Okay? And it's confirmed when you get above the peak that the RSI makes off the first divergence. Okay? This is the first divergence we're watching. I need to change this color. Okay. And this is the peak it made afterwards with, coincidentally, the key lower high. And so that was broken right here. So that is when the bullish divergence was confirmed, not here, right? Just because we're there, that does not mean that's divergence, right? This could easily come all the way down and continue to dump. Only confirmed when you get the breakout above right there. That's when the divergence was confirmed. That's a buy opportunity right there, right? Okay, makes sense. And then you can see using this in confluence with our moving averages, you'd say, okay, now I'm back above the moving average. And one thing I didn't mention about moving averages, I can't believe I didn't mention it because it's one of the most important things. I'm going to remove the longer term ones. A moving average, I'm just going to hide the candles. A moving average is a great way to visualize your trend instantly without really any candles. Like if you just want to go through a bunch of charts without candles, you can see the trend of Bitcoin through that alone, right? Now, if you had the 200 and I hid my shorter period ones, you can't tell what, I mean, you can. Bitcoin was going up and now it's going down, right? We can see that, but we can't truly see price action the way we can with the 10 period moving average because it reacts more to price. Right? It makes sense, right? Let me hide these. What is, oh, is that, that's my drawing tool. I was like, what is that line? All right. So we can look at just our 10 period moving average at any time and say, all right, right now, the trend is obviously down. I want to be trading with the shorts. Okay. Right now, trend is up. I want to be trading with the longs. Trend is up. I want to be trading with the longs. All throughout here, trend was up. You wanted to be trading with the longs. Here, the trend was down. You want to be trading with the bears. Right? This is all pointing downwards. Makes sense? Now we'll get these candles back going. And likewise, when price gets above or below a moving average, we can think of them as support and resistance. Now, this really works best in a trending market. When you're in a ranging market, moving averages as support resistance is not going to work so high. You're going to want to focus on horizontals. Yeah, really just focus on horizontals when you're in a trading range. That's key. Right? But when you're in a trending market, moving averages can be support and resistance. We'll throw one of my favorites. We'll throw a 60 on here just to show you guys what I'm talking about. A little sneak peek into the Boss Crypto trading strategy. We'll throw the 60 on there. We'll make it white because it's beautiful. Okay. These coins, you can see it's kind of ranging here, so it's not giving much significance to these moving averages. But once it enters an uptrend again, we'll see this 60 is going to act as support a lot. And so is this 10. Okay. So when you're above the 10, above the 60, you're looking for longs. When you're just above one, you're still feeling pretty confident. But when you're above both of them, you're confident in longs. All right. So as long as we stay above these, I'm pretty confident in long plays. Right? Boop. Now we got to calm down for a little bit. Wait till we get back above. Looking for short plays now. Any day trades in this time frame are going to be short until we're back above both of them, which it looks like we just did. We're getting real tight here. She's trying to hold. Looks like she's holding the 10. You guys see what I'm talking about, right? Support resistance. And we'll see prices constantly coming to and from these moving averages. Right? It's almost like this 60 is a leash, right? As price moves far away from it, it wants to bring it back. Price moves far away from it, wants to bring it back. Far away, bring it back. And then when price got really far away, that was just too much, and it whiplash affected us all the way back. we'll go to the weekly to show even more what I'm talking about. Look at this distance. When we were at $20,000, this is another key feature of moving averages is distance. Distance between your moving averages and price is very, very important in knowing when to take profits. Okay. So I'll get more into that into the, Boss Crypto trading strategy section, but I just want you guys to know distance is huge, right? I mean, look at when you were at 20K, your moving average was down here at 3K. You were up 500% from that. And like I said, they're like a leash. It was bound to come back to that sooner or later. Even if this went to 40K, it wouldn't matter. It was bound to come back eventually. Okay. So when you get big distance from moving averages, take profits. That's a big lesson there. Right. So sorry that I kind of went on a little rant there back again about moving averages, but it plays in to RSI. Okay. Let me go back to our divergence example. Okay. So remember, I'll do a little recall here because I just went on a little tirade. Higher low in the oscillator, lower low in price. That's an indicator that the buyers are bringing back some power while the sellers are exhausting their power. And that's confirmed when you get above the first peak of the divergence. Right here, confirmed. That candle, that's a buy signal, right? And then you book some gains into the lower high from this. And then you watch for the retest, both in price, right? You broke out from this zone. You want to retest that. And you broke out from this zone in the RSI. You retest that. That was the perfect RSI divergence breakout play. And then, like we talked in other videos, like in the chart patterns, the Fibonacci's, use those fibs. Check out where we stopped first, the 1.618. Continue to the 2.618. I mean, look at that, just perfectly. And we use the anchor of the lower high from the divergence and the bottom from the higher low of the divergence with our fibs to calculate these targets. All right, it's some pretty advanced stuff right there, guys. All right, so I really like divergence on the RSI, and it works in the exact opposite direction too, guys. Right? Higher high in price, higher or lower high on the momentum indicator, indicating that, all right, buyers have lost some power now, but they're buying at higher prices. That's weird. That is buyer exhaustion, and that's confirmed when you break below the first dip after the divergence began, right? So this was confirmation of that divergence, and here, that was the short opportunity. All right, and then you didn't really, cover it into horizontal resistance for sure. But then you didn't really need to get rid of that short until you got this divergence. And then you got the perfect exit and long opportunity, right? Two other things you guys might be noticing. Where was this long opportunity? Right back above that 10-period moving average. Where was this short? Right when you broke the 10-period moving average. Interesting. When does this trend break down? Right when it breaks below the 10-period moving average, right? Now, I understand they're just an average of the last 10 periods of closing prices. So it makes sense that they're going to follow really closely. Okay. So divergence, one of my favorite reasons I use the RSI. Do be careful for fake outs, right? I'm not the biggest fan of just the buy here, sell here. But I would much rather be a buyer below this level than I would never really want to be a buyer up here without the right setup on lower time frame. Right? And you see how it didn't really matter if you had sold here, 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 here. Like, you got the chance again. You always get the other chance. You always do. You always will.